What's up, everyone? It's your boy August BTC back again with another video. Today we are going to talk about crypto options trading around Bitcoin, cryptocurrencies, Ethereum, and just want to give you guys another portfolio update. How we're doing, what's the price action of Bitcoin looking like today, and just a quick update. As you guys know, for those who are new, the goal of this channel is basically show you my journey, how I take an account from $1,000 from where I started to $10,000. That is a goal, step by steps, the wins, the losses, full transparency, real trade, real money. Right, so today, looking at the price of Bitcoin, as you can see, we are up. We've seen a major bounce, which is really, really good compared to the previous video, if I remember correctly. As you can see, we've made a very nice movement to the upside here. But what is the market structure still looking like? We're still in a bear market. As I've reiterated a lot of times, this is a 200-day moving average. And as long as we're below this, we are still in a bear market. So any bounce here needs to be treated with caution, right? So whatever happens, you need to be very careful. But I mean, the portfolio is kind of liking this bounce because the portfolio is low key net bullish, right? So if the price of Bitcoin goes up, I win. If the price of Bitcoin chops, I still win. I get premium. If the price of Bitcoin goes down, I still win, but my losses are capped very well, right? So I need to win basically in any scenario, in any market. That's how I've built a portfolio. But according to analysts, again, you are very close to a bottom, guys. By Q4 should be September, October, we should see maybe a final bottom for Bitcoin, and then we should enter a bull market. So it's very important to position yourselves very nicely, guys. So same thing with Ethereum. Ethereum is also seeing a very nice bounce. As you can see, it's into the resistance level now. And if you can break this 1.8, this would be a really nice level. Again, it's below the 200-day moving average, so it's still in the bear market. Same thing with Solana, below the 200-day, still in the bear market. Solana has found some nice support here and made a nice move. So at one point, guys, I was down 36%. This was on June 26th. Today it is July 4th, the 4th of July. Happy 4th of July to those that are celebrating. But yeah, so we were down minus 36%, guys. So one point one even down minus 40%. I think the PNL here was down minus $1,000 at one point. But now, how are we looking at today's portfolio? This is how we're looking, guys. We are down only 5%, from 36% to 5%. And all I literally did was being patient, adjusting the portfolio. Remember, I recently changed to a brand new strategy, which really helped. And all I have to do is just be patient, because each and every day I'm still getting paid by Theta each and every day. The book is, net positive delta, right? But I'm still getting paid, and this is still how much I still need to make in the next 26, 28 days, more or less, okay? So quick update on the portfolio. Like I've mentioned, we always look at the maintenance margin. It's creeping up a little bit, and I'll explain why. But obviously, this is something that I'm monitoring. If we get like 50, 55%, then I'll start to act. But for now, it's not a problem, because what's happening is as the market is going up, because my delta is positive, the maintenance margin kind of goes up, right? But we're down only minus 5%, which is great. So in Rand, we're only down 2,000 Rand, 2.5, and we still stand to make about 4,700 Rand in the next couple of days, right? Every day we're collecting 275 Rand, so that's great. So how's the portfolio looking like? So today, Bitcoin is up about less than 1%. Same thing with Ethereum. We had a massive move from 57K, and we're up here at 62. So this is really good. So how's the individual positions looking like? So remember, guys, I'm holding a synthetic Bitcoin long perpetual contract, which never expires. So it's as if I'm holding a stock, right, or an asset, which is obviously here Bitcoin. So I don't need to hold the actual underlying asset or buy Bitcoin on spot. All I can simply do is just hold this perpetual contract. I'm using portfolio margins, so it really helps me to control. This is 0.1, so 0.1 of this position is about 6,200 Rand, $6,200 that I'm holding here. I don't have 6,200 on the account, but with portfolio margin, I can basically control 0.1, which is about $6,200, which is massive. So as Bitcoin goes up, right, the position is also going up. Okay, so far from my entry, my average entry price of this position is 60,000. Bitcoin is at 62, so that's a 3.8% move, right? And only from that I made $200, $234. So that's about 3,000, almost 4,000 rand made already in a 3.8% move, guys. That's nothing. That's literally nothing. So if Bitcoin basically moves, this is only like a 3.8% move, right? So if Bitcoin, guys, goes back to maybe touches back the 200-day moving average, that will be I entered at 60K, right? 60K, right? If Bitcoin goes back to its 200-day moving average, that's a 24% move. That would be massive. 24% move would be massive. I'll be making lots of money, probably making maybe in the thousands of dollars, I think, which will be great. So the goal is I'll be taking profit. Each 10% move, I'll be taking profit. So if this position gets to 10%, I'll take maybe like 25% off just to lock it into the account. So this is a position that I have here for Bitcoin, which is tremendously up. This is good. And then what I have is I have insurance, right? You saw this is basically the perpetual ladder collar strategy that I'm running, right? So I have a long perpetual contract, and then I have insurance. Insurance is these three long puts. Why do I have insurance? Because number one, we're in a bear market, right? So when you buy puts, you pay premium. So I sacrificed $56, $39, $125 that I sacrificed, right? Saying, okay, if Bitcoin crashes tomorrow, because we're in a bear market, anything can happen. Bitcoin can crash tomorrow. If Bitcoin crashes, these puts are going to help absorb or absorb the loss. So the loss won't be so massive. Okay. So basically, this is a defined risk, right? I like to trade with defined risk and not undefined risk. It's always good to know how much you're going to lose. Okay. So with these puts will gain value tremendously. The reason why they're in a loss right now is because Bitcoin is going up. But if Bitcoin was going down, all of these are going to be in a gain, right? And this was going to be in a loss. So always have insurance, always have protection. This is called the risk management. When you're managing a portfolio, I'm here for the long term, right? I need this portfolio to survive every kind of market, especially in the bear market, which is brutal. So if we're in a bear market, I'll probably have less insurance. But now you can see this is the ratio is 3 to 1, right? 1, 2, 3 long puts. So right now, this is what's happening. But the good thing is this protects me fully on the downside, but it doesn't fully protect me on the upside. So what does that mean? So if Bitcoin continues to go up, the maximum loss that I'm willing to lose on this position is $56, $39, and $125. Okay, so far here I'm close to losing maximum loss, which is 84%, 56%, and 69%. Okay, and I'm fine with that because the good thing is if Bitcoin continues to pump maybe to 100K, right, then these positions will reach its max loss. Okay, so basically above 56, 39, 125, I can keep making money, right? And these positions will be capped, right? So they won't lose any more than this value. So this is a benefit of a long put. So going down, the profit is unlimited. Going up, the max loss is only the premium you paid. All right. So this is insurance on the downside. Very important. So now I told myself, okay, cool. So I have a directional movement to the upside. If Bitcoin goes up, I make money. If Bitcoin goes down, right, I have the risks. I'm protected on the downside, right? So I don't lose as much money or terribly. But what do I do in the interim? Because whilst waiting, I want to be paid. That is why I have these short positions or short strangle. Okay, I have these short strangles where I have basically the two short puts, as you can see here, right? I received $85 in premium, $97 in premium, and it's currently decaying very nicely. These positions were in a massive loss when Bitcoin crashed because I opened up these positions when we were, I think, at 70K, right? And then Bitcoin just crashed from there, and obviously they're losing badly. So very important, very, very important. So basically I'm getting paid each and every day. How am I getting paid? By Theta. So this position is paying me $4 each and every day, which obviously gets added to this bucket, which is about $17 a day. So this $17 a day basically chips off or erodes this loss here, right? So each and every day this loss gets lesser and lesser and lesser, even though Bitcoin does nothing. But I don't even need Bitcoin to move, right? Bitcoin just needs to stand still for this loss to disappear each and every day because of theta. So each and every day, $17 basically is being taken off $157. So basically, this is the strategy, guys. I'm positioning myself to win. So each and every day, this is how much I'm collecting. Okay. So this is basically $8 on this leg, on these two legs, right? And these $8 is also eroding this loss here. So as each day goes by, this loss gets lesser and lesser until we go into the positive. Okay. Then moving on, I have now three short calls doing the same thing. Basically, short puts, basically you're saying that you want the market to go up. When the market goes up, right, your positions gain value. But then short calls, you want the market to go down, right? When the market goes down, your positions gain value. Obviously, now my short calls are bleeding heavily because Bitcoin is pushing up. So what am I saying here? I'm saying with the short calls that I don't want Bitcoin to be above 63, 64, or 65. I want Bitcoin to be below 65, 64, and 63 in the next 26 days. Right now, Bitcoin is at 62,400. So maybe next week we might see it test 63,000, but I have a plan for that. Okay. So for the short puts, I'm saying that I don't want Bitcoin to be below 59 or 58K, and it's happening right now. So it needs to stay in this range. Like 62,400 is a range that I actually wanted to stay in the next 26 days. But I mean, I can't predict the market. Bitcoin can rip up from here, right? And it doesn't matter what happens. I just need to, you know, position myself to still benefit regardless. So this is Bitcoin, right, guys? So far, massive great profit. These positions are still in a loss. That's why the P&L is still net negative. But as each day goes by, it's going to erode because of the theta. Same thing with Ethereum, guys. Same thing with Ethereum. I'm a little bit more aggressive on Bitcoin because I get more premium and I get paid more. Ethereum, the premiums aren't that much, right? So for Ethereum, I have the same thing. I have a synthetic long contract on Ethereum. I have a 1.1 Ethereum. So basically, as Ethereum goes up, I'm in a nice profit. Again, I'm close to 4% profit, which is really good. If we look at the Ethereum chart right here, massive opportunity, guys. Like I've been saying on Ethereum is massively on the value, guys. Massively. Like, look where it is. Like, if you check Ethereum in the past, right, the same thing happened. Same thing happened in the past. Look where it was, right? From here, it bounced all the way from here, right? Before, this was in 2025, last year, literally went all the way to the all-time high. Massive 265% gain, guys. Imagine that, right? So it's probably going to repeat the same thing here, right? So because this is in a bear market, we're in a bear market here again, right? Massive position. All right, so I'm going to have another 231% gain. So I'm really playing this, and I'm going to ride it up to the next bull market if it happens. So that's the goal here. So I have this long position currently up $72, which is about 1,100 rand. I have the protection, which is a long put. I paid $16 for it. Obviously, it's not a loss because Bitcoin is pumping, but I have an income generator, which is this short call, which I actually rolled before. The call that I had was 1750. If I go to the history, you will see here, you see 1750. What happened is that Ethereum is above 1750, I think. Let's see, 1750. Yeah, so each time that my strike is breached, I roll the position for a net debit. So you would have seen here that you know, I paid, well, I lost about $54, right? And then I sold to open another position. So I rolled the position and I gained about $56 in premium. So this is what I'll continuously do, especially on the short calls if they get threatened. So always need to have a plan. But with this, I received $56 into the account. So that's pretty good. Right, so these are the positions basically. Just to explain very nicely in a nutshell, it's a perpetual ladder collar, right? So basically, I'm benefiting in any movement of Bitcoin or Ethereum, right? So Ethereum goes up, I benefit, I print some money. Ethereum crashes, I have insurance. I have insurance basically where, right, it's just this long put is going to protect me to the downside, so my loss is going to be mitigated drastically or massively. And if Ethereum does nothing or chops or it ranges, I get paid each and every day on this short call position, right? So the same thing here with Bitcoin. So this is basically what I'm running. And what I actually want to do, because we're in a bear market, I'm going to remove these two short puts, right? I'm waiting for them to go back into, sorry, these two short puts here. I'm waiting for them to go back to break even at least, and then I'm going to remove them. Why? Because for my strategy in the bear market, I want to have less short puts, right? Short puts has been my downfall a little bit in the account. This is things that you learn. This is things that you obviously get better with time. So short puts haven't been too great for me, so I'm going to remove them, and I'm just going to focus on short calls. I'm going to be more aggressive on short calls in the bear market, right? So because again, prices tend to go more down than up. The pump that we're seeing here might be a relief rally, and we might go back down, right? And if we don't go up, I can definitely profit from all the premiums that I'm receiving from the short calls, these short calls here. So that's the strategy. That's why on Ethereum I don't have any short puts. I did some research, I did some analysis and things like that, and this is the best strategy. So in the bear market, I'll have more short calls. In a bull market, I'll have more short puts, and then in a choppy or rangy market, I'll have both. So it's always important, guys, to have a strategy and stick to your strategy. So this is what I'm going to do. So as soon as these two puts goes back into profit, I'm going to close them and then leave these short calls. Maybe I'll add another short call and be a little bit more aggressive. But anyways, that's a portfolio, guys. And if you look at the equity, we up just $3, less than 1% on the day. During the weekends, Bitcoin doesn't really move that much. So, but a good thing that I want you guys to see is ever since I've changing and adopting these strategies, we're only going up. We're going up to the right, which is really good. So I want us to have this continuous momentum up to the right, and we well on our way to $10,000. So that's it, guys. If you guys like the content, feel free to drop a like, comment, and subscribe. I'll make sure to post again really, really soon. And thank you guys for joining me in this journey. Again, if you have any questions, drop a comment, share the video, and I will see you guys on the next one.